Yo, what's up, guys? It's your boy Looney, and this week was brutal. A lot of red across the board. We're seeing tech that pulled back, we're seeing crypto, we're seeing a lot of hype, small caps even dipping, and we actually flip to fear and even close to extreme fear when looking at the fear and greed index. But here's the weird part. We're still less than 5% away from all-time highs. We're also seeing gold hitting new records. And the Fed is talking about possible rate cuts coming soon. So what does this all mean? Why is the market acting fearful while we're close to new highs? And what I'm personally doing with my portfolio right now. But before we dive in, quick shout out to the Discord. It is free to join, and I also offer a premium membership for $8 a month, and it gives you access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links are in the description. But why the market feels broken right now? Because it feels strange because we're seeing red candles and fear headlines. Yet the indexes barely moved from their highs. So let's actually look at SPX this time. And if we look at the 3-month chart, we are seeing that dip, but it's really just a dip. And this is not showing weakness. This could be showing rotation and money being moved around, or it could just show a healthy pullback. But we don't really know what's going to happen next. We are seeing a lot of overbought tech being sold off. And perhaps people are putting their money into defensive names and maybe even going into gold. And this kind of pullback is normal when markets have rallied for months straight. We're just seeing traders take profits while investors get nervous. That is another possibility. We're possibly seeing a lot of just profit taking. And that's exactly why the fear and greed index is in fear. Not because the world's ending, but because short-term emotion is driving sentiment. Now, let's actually talk about gold, and let's pull up one of the indexes for gold. So I believe you can just look up GLD. Yes, so we're going to pull this one up, and we can see that it is absolutely just beating all-time highs, and it is just up only for gold because it's quietly just hitting new all-times every day. And this might sound sort of bearish, but it's actually not, because gold is usually a hedge against inflation. And gold tends to rise when investors expect lower interest rates because holding cash is less safe when there are lower interest rates. Where holding gold is that hedge, because when interest rates are lower, inflation increases. And especially it is a hedge with more uncertainty, which both are sort of happening. And the market is basically saying that we think the Fed is done tightening and Fed rate cuts are coming. And again, when rates drop, money becomes cheaper, and that pushes investors toward risk assets and hedges like gold. So gold hitting new highs isn't a sign of panic. It's a sign of repositioning before the next phase of the market cycle. Because perhaps with all this transition to gold and we see the profits from gold, perhaps that will be cycled back into crypto. And that's why I also am holding crypto. We're going to actually talk about crypto as well in a little bit. But let's talk about the Fed rates and its cut, because I believe you can actually bet on it, or I did bet on it, and it should be on the prediction markets side of things. And if we pull up, I think it's economics, should be, yes. So in October, there is pretty much a 100% expectation that we are cutting rates, or cutting at 25 basis points, which is 25%. So the Fed really didn't start cutting rates until later this year, which is why we could see some short-term volatility. But this will be long-term tailwinds, because the first few months after the rate cuts, it can be choppy, and sometimes the market actually dips before ripping higher. But historically, when inflation is under control and cuts start, it's usually bullish for equities, especially for tech, consumer, and growth stocks, and also even risky assets like crypto. So yes, this red week might feel uncomfortable, but this is when you want to start paying attention. Not when everyone's euphoric. Right now, it is showing that everyone is panicking. We don't know how actually accurate that is because we are such close to all-time highs, but it is worth noting that we are in the fear aspect. And yeah, let's look at crypto because crypto has taken a massive hit. My portfolio is pretty heavy into crypto, so it was affected pretty harshly with this, but I'm down 19% with just all this different news. And it was sort of like a domino effect. One led to another. And all this is really just noise. And we should be seeing a correction, or I'm hoping for a correction, but I'm prepared for both. And that's why I want to get into what I'm personally doing right now. And that's dollar cost averaging. I'm dollar cost averaging every day into crypto, stocks, and just not concerned about day to day. If we go higher, if this turns around, I am positioned for that. I will be able to take profit. I will be in the green. If we go lower, I do have covered calls to help hedge. I also am going to just buy. I'll just buy lower. If the crypto decides to dip 80%, we have seen those extremes, which I'm not sure if we're going to see that extreme this cycle. But if we do, I will continue to buy dollar cost average, just simply building those positions. But what did I do pretty recently? And this is something that I give out to my premium members, but I did sell or take profit in a few stocks. So I actually sold on SLN8. So let me pull that one up right here. And this one was actually down today. But if we scroll down here, I did take some profits, or I took all profits. I sold for about 100% gain, and I rotated this. And we'll get into what I rotated it in after this one, because I also sold Walmart. Walmart's actually a safe bet if we go into a bear market, but I was already up pretty significant. And yeah, I wanted to be in a more or less, I want to be less diversified. So that's why I sold off some of this stock and I had a profit of 70%. So pretty good return with that. And what I decided to do is roll those profits into Amazon. Now let's actually pull up Amazon, and it should be right here. And now it takes up around 2% of my portfolio, so not big, but it is there. And I did put about $500 or $700 into it just today. And this stock will be affected by rate cuts as well. Amazon should benefit from this. And they haven't seen much growth. They really have been a lagging company when it comes to returns. It's down actually on year to date. So you can see I'm not going all in. I am just putting a small amount in. And this is really just a long-term play. And I'd rather put it in here than just simply holding cash. And that's another thing. I am holding cash. If we do see a downturn, I do have cash available. A lot of it is in options, about 10,000 in option. And then I have 11,500 in buying power, or if you net that, about $1,500. But maybe some of these options I don't get assigned and I'll get my cash back. But we'll see where things go, because usually fear means opportunity. So whether my options turn into shares, I'm okay with that, because fear, when there's fear, that's the best time to strike. So just to sum things up, the market has been red. It can continue this way, but it's normal. It could be rotation. It could just be a pullback, or it could just be something bigger and we're really just going into a bear market. But fear is high, but we're still at near all-time highs. Again, gold is setting records, and that is worth noting. Lastly, is we do have rate cuts ahead, which could bring volatility, but it could also bring some upside. This combination, fear high, prices high, usually confuses everyone. But it's often when long-term investors quietly build their next wave of positions. So I'm staying calm, taking small profits, and when things get extended, I'm going to rotate into strength and use fear as an opportunity, not a reason to panic. Because when everyone's nervous and the market's still near highs, that's not a sign of the top. that's usually the calm before the next run. Until next time, peace.